All right, ladies and gentlemen, welcome all the folks here that we have on the go-to meeting. Um, we do have a session here with Nick Shaheen, lead trader. My name's Rodrigo, and I'm going to be going over some interesting things here with Nick, right? So we have John, Joseph, Nubi, Sakib. What's going on? All right, and Tariq. And Neil, Jacqueline, Jim. All right, John, Joseph. So we have a pretty good session there on the GoToMeeting. So welcome all you folks here and everybody there. Shout out. We're going to have Nick Shaheen here in a couple minutes. Just wanted to come here and test this new thing we're trying here. Just making sure everybody can see there. All right, sound is good. What's up? What's going on, Barry? How we doing? Um, we are not, no, this is not for BBIG, Majdi. Today we're going to have pretty much, it's like a live trading education we're going to have with Nick. We're going to be going over trade ideas, education, options, analysis, overall market discussions, a whole bunch of stuff. Pretty much like right now, the reason why he's not here is because there's a session where he goes with the chat members, and it's right here. It's on Sundays from 10 to 1, and he's sharing his screen, going over trade ideas and setups. And basically, I think he goes over about 150 stocks. And from there, from that point on, he does the videos, records them, and he will post them in the static chat, which is right here. We have some people there actively right now. I believe that's Nick posting that right now. Yeah, that looks like it's him. So, I mean, this is, he will post this every day. Well, not every day, every Sunday, right? But he'll post it after the session. So you can watch this here, right? So he just posted this. Looks like there's 3 separate videos where he goes over all of these stocks. Let's see, Google Sheets with links. Let me just open this. See, I believe, all right, I believe yeah. So these are all the stocks that he goes over, right? And you guys in the chat, well, from the chat members, pretty much pick up you pick the stocks, right? And he will do a full review, put a comment as well, and give you a link right here where you can pretty much get a full technical analysis of everything, Nick. It's amazing. It's amazing. Let's see how many stocks he did today. Damn. 177. He did 177 stocks. So I believe we're going to have here, Nick, pretty soon here in any minute. He'll just pop in here. But just wanted to show. What's up, Sandra? How are we doing? Yes. All right. So we are getting here, Nick. We're getting reception here of Nick Shaheen, I believe. Let's see if he can get set up. I see him there in the back. He's officially here. He just needs to set up his mic, I think. Okay. All right, 1 second here. Okay, so we have Nick Shaheen here. I think you have to unmute yourself there, Nick. Okay, I'm not sure. I guess Nick is having maybe a technical issue there. 1 second, folks.
You guys switching technology on me, so give me a minute to set myself up.
Nick, I was showing them the form. This is the list, 177 stocks with all those. You're just getting off of it right now, and you're about to get into it here. So, I mean, this just goes to show, man. Like you go all in for the members. You know, all day Monday to Friday, 9 to 5. Sundays, you know that's commitment. In my book, that's called commitment. All right. So thanks a lot for always helping out um, your members out there, Nick. Yes. All right. So we are in. You're live. You're there. We are live here with Nick. So I think you're good to go, Nick. Check your audio there. We can hear you. I think you're good. So, all right. Yeah, you're sharing the screen there. All right. I think you're all set there.
Okay, so I can't hear you.
Can you hear me now?
I wish I had known that this was a new thing. I would have tested it earlier. Oh man. Okay, I think I might be able to hear you now.
Can you hear me now?
I can hear you now.
Yo,
So
what's
what's
up,
with the
man?
switch? How come we switched?
You know, this well, I mean, there's a lot of so we have some people here on the go-to meeting as well, right? You know, and we are we have some people there on the YouTube side as well. So let's go ahead. It seems like everybody's good. Wesley says we're good to go. Yep, yep. So, all right, man, let's go ahead and rip it, man. I think your screen's good to go, Nick.
Okay. So did you caught me just off of a long presentation for my people, and that's the Sunday meeting. So I guess I'll introduce myself. I'm Nick Shaheen. I work with Benzinga, and we help out thousands of people trying to get better at trading and investing, mostly using options. So today we're going to just give you a little taste of what we do, and it should be enticing enough for you to either go down that road on your own or join us for that. So first of all, my week starts really on Friday after the week ends, and it all starts with homework. So if you're serious about trading for a living or being successful at investing or trading, any which way style you currently use or want to use, without homework, you won't be able to do much. You'd be lucky you'd hit some home runs from luck. But in order to be consistent, you have to do homework. And so on Friday, I ask, hey, give me your tickers so I can do the homework for you. And we had 176 stickers that I read through this morning in 3 separate videos. And so this is hours of work on my part, Saturday and Sunday morning. And these are clickable links. So if somebody is not able to attend, they can get this. If somebody is not able to attend, they can also get a video, actually 3 of them, and they're almost alphabetically in order because at the end some people added tickers last minute, so they weren't alphabetically ordered. So I give an opinion and I give potential trade setups and what to do and what not to do. So it all starts with homework. So discipline, discipline. It all starts with homework. So that's my Saturday, Sunday. And then tonight, I will share another video that's a lot shorter. This video here is 2 hours. Set of videos. I will share a strategy video. It's about 8 to 10 minutes usually. And I tell them what I think should happen. So for example, here I said we need a dip and I will be buying the dip. And the dip came, small albeit. And if you bought the dip, you made money. And so we're in buy the dip mode. But in order to get to these levels, we need a slightly bigger dip. So this evening, I have a couple of plans for that from 2 different schools of thought, And I think it's going to be a blend of both, and we're going to be watching to see how we can make money from both. So that's the strategy video. In order to be successful yourself, you have to do the same. You have to do the homework and then look over at the strategies side of it, meaning you can't just trade. You have to trade with some sort of a plan. And the plan starts with, what's the market doing? Like if you have stock ABC and you love it, it can't rally if the market's correcting. It can't rally long. So you have to do the stuff. There's no shortcut. And then the week starts, and then you put things into action. So to put things into action, you need to be able to actually have some set of rules. This is a presentation I have used once, and I love it, and I just go through it to quickly walk you through it. So you need to have discipline and a method of sorts. You cannot succeed consistently without a method. So when you take a risk, you have to know the risk size. So how much am I willing to lose? I say this, it's not like the obvious statement. Most of you know this. All of you know this. Most of you don't know what to do with it, really. This says, I will never short a stock ever in my life, ever again, the way people, quote, short stocks traditionally. In other words, if you sell a stock short outright, so you borrow it, you sell it, you don't know your risk size. You're taking unlimited risk on paper. If you sold a call in options naked, you don't own shares, you just sold a call, you're taking unlimited risk. Therefore, you're breaking the first rule of investing. What's the consequence if I get it wrong? You'll say, I'm only shorting for an hour. It could end you. There's a very small chance it does, but if there's a very small chance it does, I'm not going there. I'll pass. Okay, the second part is, what are my odds of success? You need to know that going in. Otherwise, how do you know when to quit? Luckily with options, that's an easy thing to do, very easy. So if you join me, I'll show you how to do that. So when I say I'm managing my risk, most of you mean I'm managing how much I can lose. That's not what you're managing. That's a decision you make in the beginning and you move on. You're managing your odds of success. You take the risk. When do you call it quits? When my odds of success are no longer good. That's when I call it quits. And everybody has definition for what's good. You know, some people have bigger risk appetites than others. So I may be scared out at 10% loss. You may be able to withstand 20. They might be able to take 30% heat. Okay. So other things that we need is this one. This is really homework we talked about. Part of the homework is you set alerts. I have 1 million alerts on my charts. The second thing that's important to actually deploy that risk, let's say you did everything right up until this point, is you need a reason to go long or short, to take a position. This NTNT acronym is the one. It spells out no trigger, no trade. So basically, if you cannot tell me a specific reason you're taking a position, then you're winging it. And I have heard the answer, well, I thought it was going to go up. That's not a reason. That's a hunch. You thought it was going to go up because if you can give me whatever comes after that, then okay, you have a thesis. Whether right or wrong, it's not up to me. You had a thesis. Then you get to decide later if it's right or wrong by seeing things develop against it or for it. For example, if somebody thought that they were only to go long Lucid because they could produce 40,000 cars. Last year, that was the message. This year, it's more like 11, I think. I don't track it anymore. So if you took it because you thought they can produce 40,000 or 34,000 cars, now it's down less than half. Will you change your decision? Your valuation must change, right? So you need a reason. The reason can be fundamental, like I just mentioned, or ideally, in my opinion, it should be on the chart. For example, if I wanted to buy the breakout above this, that's my reason. And if I got long here, somebody says, I got long because we broke out. Valid reason. If we dip into support, if we fell into here and you said, I got long because this is prior support and somewhere here there's a bottom, valid reason. So these are technical reasons. Then you know when to call it quits. All right, so this is so far as logical, right? Now, two things after that that are pretty silly to say, but so super important. You need to practice booking profits and booking losses. What do I mean? Some people take a position and it starts going red. and they cannot close it because they see red, and then suddenly it's maximum loss and it's really, really red. So it is not a good situation. If you book a loss once or twice, then you realize that it's not the end of the world. So you have the ability to do it when you need to. That's my concern, is you need to close it, and when it counts and you can't, and you get locked, and then you see it go to heck. And you need to be able to book a profit and see it run without you. I'll give you a perfect example. The day before the rally happened recently in the IWM, I said during the day, I said, I'm going along the IWM, and then this happened. So I took along, and then I said, I'm going to try to get cute with it and lock my profits, and I sold diagonal, which basically limits my upside. It doesn't make me lose money, it just limits my upside. So I locked myself at a worst case scenario of doubling my money. Those who didn't do that tripled their money. But I'm not crying about it, because I've been trading long enough. I have the maturity level of a trader who's seen ups and downs, that I can live without having to milk every penny of every trade. So I missed out on a little bit of upside. It was a great call. I'm happy everybody else profited from it. Timing was perfect. I didn't perfectly time my exit, but I did the right thing. I doubled my money, and that's good enough for me. But it wasn't perfect. I left money on the table. So that's part of booking, locking, booking profits. So you need an exit strategy. When you take the NTNT, when you take the position, you need to manage it. Stop out if you hit your level of loss. And the stop out could be a dollar amount, could be a percentage, it could be a level on the charts. For example, if I was short the IWM, and I would have said, if it goes above here, I'm out. That is a stop out trigger. So I would have left my short. If I was bearish, I would have left it. Or I would have said, I'm going to short the IWM, and I would get out if I lose 30% of my money. And then IWM does this, and I'm losing 30% of my money, I get out. Those are two different methods. Sometimes some people use dollar amounts. They say, I invest $3,000 in this trade. I'm willing to take $500 of losses. And when I see that, if it happens, no questions asked, I get out and fight to live another day. So all these are different ways, but they are absolute musts. You cannot succeed in the long term if you don't have that. Okay. And then have balance, spread, averaging in. Those are common sense. Don't hope. Common sense. Let me tell you what balance is. On Friday, I lost some money on intraday short that didn't work out. I could recover it on Monday, I'm not sure. But that's the first time in 3 weeks that happens. It happened actually 4 weeks ago, I think. Forgot the date. Anyway, on Fridays, my next Friday is I'm not trading my own book, because that's when Reddit kicks in or something happens and they go ballistic. And it's always on the upside most often. But I was long several things. So I was like, okay, for balance, I'm going to take a bearish position. I took it, it paid, and then it didn't pay, and then it paid, and then it didn't pay. So it is an opportunity to keep your book in balance. So I didn't outright short everything. I was balancing my longs. My longs were making me money. So overall, the day was green, but I had one trade that went bad. And that's the point. You balance your portfolio. One day you lose a little bit on one, you win on most. And the day you lose on most, that other one helps you balance out to have not a completely crappy day. So have balance. That's important. When I say spread the risk, I mean it in many, many different ways. If you already trade options and you're selling options for a living, like selling credit spreads, and you make all the options expire on the same week or same period of time, if things go against you, you're losing on all of them at the same time. Spread your risk spread your risk over time, spread your risk over different kinds of tickers. If you long everything that looks the same, one bad day for that sector, and if you long nothing but banks, the banks have a bad day, you're either happy, or sad. Spread your risk across different things. If you long everything and you're shorting oil, okay. If you long gold, and spread your risk. Or actually spread your risk. Like if you buy calls in Tesla or puts in Tesla, that's a widowmaker. Tesla is a killer if you don't know what you're doing with the charts. You can make a lot of money, or you can lose a lot of money really, really, really quickly. So spreading your risk means instead of buying a call in options, you buy a call spread, and I help people do that. There are easy spreads, there are complicated spreads that are easy to win with. There are credit spreads versus debit spreads. So there are tons of ways to use. The good thing about options is that you can take positions that don't need anything. Like if you sell a put spread, which is a bullish position, you don't even need a rally to win. And the stock you're selling the put spread in could fall, I don't know,
Right.
30% before you lose some money. What's up?
Nick, and just really quick, I know that you're pretty much, you do a lot of live trading and like the whole day, but
By the
let's not
way,
forget.
I need to cut off at like 15 minutes tops after the hour. So I'm have a hard stop line. I'm giving you the heads up.
All right, yeah, just no worries, man. But yeah, just want to let the folks know that even though you're doing the live trading the whole day, really something, very important as well. You do a lot of education as well for people that are new,
So
even people that don't trade options, that just trade stocks, like, maybe invest long term. You have different types of traders there, right?
we have all styles. So let me tell you how the day goes in my world, in my people's world. In the morning, I wake up at the crack. I live in California, so I really have to wake up when you guys are still sleeping. So I wake up and I do my homework. I prep the day. I write it up. I share charts and I put them in the chat room for everybody to see. So if I went to okay, that's Friday. So Friday before the market opened, I share all the charts for the day and all the notes for the day. And then middle of the day, I share another setup. And then Sunday, those are the 3 videos for 2 hours worth of homework here and the table that I showed you earlier. So that's every day, every day, every day. And then in the chat room here, questions come in and we discuss those questions above and beyond. All right. So that's what happens first thing in the morning. And then I launch a room that's a live room that looks like this, where the left side is what you're looking at, me sharing my screen. The right side is literally 310, 320 traders from the membership, of course, that are blessed to be able to be there all day or part of the day, and they're able to go in and out of trades every day. And there's an education going on all day. I created this live room for trading. I created it to actually be active and make money inside the day, and we've been very successful with that. But it become, if we have some dead zones in the action, all kinds of learning. And my comments on the chart in the short term apply to the long term, and the level of intelligence that these people are getting as far as gaining about charts and how price action happens and algo flow and all of that is gold. So if you're able to join us here, you don't need to, but if you're able to join us here, you're going to learn a lot more than somebody who's not. So are you missing out if you can't be here? No, because anything that has sustainability, anything that's not like get in here, get out here, which is what most people can trade, is not that fast, you will get delivered to you here in a write-up. Like the IWM trade, you didn't miss out if you couldn't make it to my live room, because I wrote it up and posted it in here. So these are snapshots of things like this person here, just saying, so they started trading the SPX last week, and they did 2,700. Somebody today told me they trade nothing but the SPX now during the day. That's it. They don't trade anything else because of this room. So they're learning new ways of making a living. I know Prabit here, sorry to out you if you're in here, he was struggling with a trade and was helping to manage it. It was a futures trade. So he's trading the futures, he's in here. Kulpreet is also active. We have all kinds of styles all over the world hanging out for all kinds of opportunities. I promise you, this is a ton of fun and worth checking out. And let me see here. Made money on SPY puts, thanks. So this is a person, I remember this scenario, I can't remember what day though, who woke up, I think it was 2 weeks ago on like a Thursday. They bought puts the night before and the market dipped and they didn't book their profits, and then the market rallied. So now they were in a loss. So they reached out. We had a long conversation as to what I would do. I said, you waited this long, might as well wait for this and that. And then the market turned their way. You see here, the market turned back their way. And then he came back and said, okay, I made money back on my, he turned the loss into a gain. So he used our technical abilities using things like this to help manage his risk, open risk. So the service is complete to any level. Learning is my #1 priority, not providing trades. The trades will come with time. I want you to learn something, a craft, a method, a system that you can use for a lifetime. And if you can't do the homework, and if you don't have enough time to do the homework, I am more than willing to do it for you. 176 stickers. You know how not easy that is? Just picture yourself, if I gave you this list and I told you type it for me with links, how long will it take you to do that, right? So I don't have an assistant. This is it. I do all of this. It helps me get ready for the week. It helps me pinpoint opportunities for myself. These are things for myself that I may end up sharing. So homework is necessary. If you develop a system and you say, I wish I knew the homework, or I wish I had somebody that does it for me, stick around. These people in here, they're not all beginners. In fact, a lot of them are better traders than me, like in, out, better traders than me. So they're there because they know they can contribute to find new opportunities, and there are other people that can contribute to find their opportunities. A lot of them share their own setups. I'm shorting Tesla, I'm shorting this, I'm going along that, I'm going along this. And if you see that person post all the time and they're getting it right, so when they post it the next time, it's an opportunity for somebody else to follow them. I have a lot of people that share their trades. Some of them are weeks out. They'll say, I'm shorting banks, I'm buying a September XLF put or something. Okay, so learning, yes. And you saw me, this is my group, options, getting started. This whole thing is mine. You have static videos that are evergreens. You want to know what an option is? I can tell you what a put option, I can tell you what a call option, I can tell you what a spread is, what a credit spread is, and a whole bunch of other stuff. What's a cash settled index? What does that mean? And I should go in and refresh these every once in a while. So I'll go and watch them myself to see if they can be done better. So this is a resource. The write-ups are all shared via chat. This is static. This is like, think about it, Teams, Microsoft Teams, or Slack, or Discord, less noise, where you can come in and reach out to me personally. I know Ryan reached out last week. Or share ideas in here. Like, for example, Alice wanted to know, can I find my trade setup? I just saw this, so I'll answer it in a little bit. My trade setup for Palantir is easy. I bought shares and I shared a long Palantir after the dip in the earnings. That's my third write-up on it, and they've all been pretty profitable. Okay, so yes, to answer your question, Rodrigo, definitely teaching, learning is my priority. Trade setups are there. I would not consider myself a trade alert program, that's for sure. I love sharing knowledge in plain, simple English. I am not from Wall Street. I can give an options class without using Greek words. The only one I would use is Delta, and that's it. Speaking of options, I can jump into options. This is my practice platform. It's with E-Trade. I am not recommending it. In fact, if you can get away without using it, that'd be awesome.
All right, just a heads up, we have about 20 minutes left on the session here.
Okay, cool. So where do you want me to go with this? You want me to take a ticker, or do you want me to go down the options? I can't see the responses from the people in here.
So anything you want to, head on for, for the time here, you want to talk about markets, or you want to talk about options. I'm pretty sure everybody here, pretty much gets.
Well, let's talk about options. Maybe we can hook some people to get interested. So the reason why I like options is because it's a matter of math. I don't have to speculate. For example, if my brother says, hey, I went out and bought shares in Apple, and I would say, what were you thinking? What is your thought process? Well, I like what they do. I have their product. I think they're going to be doing well for a long time. Okay, so what's your price target? Where do you hope the stock goes? It's 170 now. Where do you think it's going to go? Well, I think it's going to be 190. I said, by when? If he says, I'm making this up. If he says, say by November, I'll say, okay, so let me see your odds of you being right. 190 by November. Well, you have about a 25% chance, theoretical odds of it being there. So it's not great, but it's not completely bad. So it's half of a coin flip. Basically, that's the odds of him reaching his target. It's not the odds of him making money. Now, how do I use this information? I can use it to trade Apple. Like, for example, I don't know if it's going to 190, but I know it's not going to 140. And if it does, it'll be a bargain. You see the difference? Like, I can confidently say it should not be at 140. And if it is, it'll be a bargain, correct? I can make money from that statement. How? I can sell this thing here, where the worst case scenario is for me to own 100 shares of Apple at $140, which is $30 lower than now. That's a hefty discount. Let's say you don't want to buy Apple. You can sell a put spread that will bring you money about 12%, 13% on your risk, and the stock can fall to 145 and still not be in serious trouble. So if you're interested in trades like this that bring you money where nothing needs to happen, let me know, because that's what I do all day, every day for us. And guess what? I believe Benzinga is offering a money back guarantee just like they usually do. We've been doing this since 2011, heavily since 2012. And it's been always a backup that they give, a guarantee that they give the subscribers. So we're doing something right where we have thousands of people willing to jump in and try us out, and thousands of them will stick around. I have people in my group that have been there for 9 years. So, okay, we are talking options. So with options, there are no delusions. You make a bet on the price action and you manage the risk at that bet. So I don't need to own any shares to do anything in options. So I can buy a call option, I can buy a put option, and yes, they do come in two flavors. They are basically contracts. You don't need to complicate things. It's a contract, so there are two sides to every contract. Two people get together, two entities get together, and they agree on things, and they put it down on paper. This is what's going on in the options complex. You have put sides and you have call sides. Neither is bullish or bearish. I know you've heard that this side is all bullish, puts and calls are bearish. That's incorrect. There's only one scenario of puts where it's bearish, and one scenario of calls where it's bearish. If I don't own shares and I buy a put, that's the only bearish scenario. I can only make money if price falls. If I don't, if I wanted to short stock outright, I would sell a call, and so I'm short the stock and I need it to not rally. So those two are those two are bearish setups. The rest can be interpreted as bullish. I'll give you an example. What's a put? We'll go there. The put is a way for somebody to buy some protection. If I own 100 shares of stock of Apple and I'm worried about the next month or so, I can buy a put. If I buy a put, that makes me go to sleep knowing that somebody have to buy my shares at 160. For that privilege, I pay $150. So somebody is on the hook because they sold it to me. I bought it, they sold it. So they're bearish? No. Am I bearish? No. If I was bearish, I would sell my stock. I wouldn't pay to protect it. If you have a car and you don't want it, you don't insure it. You sell it. So I didn't sell it. I like my stock. I just need a little peace of mind. So I'll spend $150 to protect my 100 shares. So I'm not bearish. But what about the seller of that put? They want my shares. They're hoping it falls so they can take my shares. So they're bullish too. They want their own shares. You see how it's bullish for both scenarios. Now, if I buy a put and I don't own shares, the only way I can make money is for price to fall, because if it does fast within the allotted time, then that 150 grows and I make money. So how do I profit from that? I just sell the put. I just sell it back out. I paid 150 to own it. It's on my books. It'll show put position. It has a number of days and it counts down. The value fluctuates based on price and time. And then if one day Apple falls $10, $20, this turns into $3 or $4. I sell it for $4. I paid 150. I more than doubled my money. I more than doubled my money. So that's how people use options to trade. Some people use it to protect, other people to trade. What about the call? If I wanted to buy shares, but I'm kind of leery about the next few weeks, so I'll go to October, for example, or September, it doesn't matter, and I'll say, you know what, I'll pay $600 to lock my price at 175 versus pay 100 shares times $172 right now. It's a lot of money. So I'd rather risk $640 and be long 100 shares if I want to. Therefore, I'm only risking $640. I cannot lose more than that. Where if I buy shares, I will lose for as long as the stock is falling, right? And it's a lot of money. So this is another way to lock my price. So I'm bullish. I need a rally to win. The seller of that is the bearish guy person. So they can only win if price does not go above there by this amount. So if it goes above 181, they'll start getting hurt. The shorts. That's why they say, "Oh, I got to go cover my short." Because as long as the price is rallying, they're losing money. Never ever do this. Never. Covered calls, okay. That's a different conversation. Okay. So we just touched up. So what are options really? Options are just simple contracts. They are two opinions that come to differ and they put money on the line. For example, every contract has a term, a time. How long is the contract for? When you buy insurance from an insurance company, you say this policy is for 6 months, right? So you put 6 months on the table. If I chose October, everything here is October, 68 days. So everything here has 68 days on the contract. Price, that's another term of the contract. I can choose whatever price I want. I chose 165 earlier. I chose 175. I could have chosen this one. Doesn't matter. Price changes. The further I go from here, it gets cheaper. That's another term. Quantity. I mentioned quickly that it would cost $150. That's because every contract, this one, this one, this one, this one, this one, this one, each of these contracts represents 100 shares. So if you see a value mark, that's the price of 1.8, that's really $180. If I go to buy it, and I have only one of them, and I go preview, it'll be $180 spending. And because it's 100 shares, everything here is time 100. Okay, so that's another term. So there's plenty more to be learned about here, but the most important column that I use is this guy here called the delta. They have two of them, one for calls and one for puts. Ignore the minus sign. Now the delta definition is fancy. Ooh, does it sound fancy? But here's the unfancy, realistic way of using it, and I'm going to give it to you. This is your odds maker. So if I buy a delta of 75, I have a 50% chance of success, 0.5-ish. If I buy a $175 put, I have a 50% chance of success-ish. Doesn't that make sense? If you buy shares, the stock can go up, the stock can go down. You have a coin flip odds. If you buy a call or a put at the current price, like as if you bought shares, you have equal, you don't have, the buyer or the seller, neither of them have any statistical advantage, okay? Let me rephrase it. If I buy a call up here, what are the odds of Apple being at 210 in 68 days? Very low, right? Look at the cost of that call. Somebody will sell me that call for 14 cents. So basically for 15 bucks, I can own the right to buy shares at 210. That's because it's probably not going to happen. I'm wasting my money, me the buyer. The odds are under 5%. See how the odds drop? So let me reword it. What does this number say? 0.06. That's pretty small. It's not 1. It's not 0.1, not even 0.1. 0.06. So like 6%. So this is saying that there is very little. That's a tiny number. There's very little chance Apple, everything here is Apple, will be $200 in 68 days. That's what this says. Very little chance that Apple will be $200 in 68 days. It's not impossible, but whoa, would that be a nice lottery ticket? That's why it's only 40 bucks. If you buy this, you spend $40 and Apple skyrockets to 200, that $40 turns into 600, 400, 900, I don't know, per contract. So if you do 10, you risk $400. You can turn that into 9 grand. But those are lottery tickets. I don't do these. Those are low odds. I rather do something with a little bit better odds, but it's feasible. I'm trying to explain delta. Let's take it to the other side. Delta, 50-50 around current price. Look how it drops. What does that mean? There is very little chance that Apple would be 135 in the next 68 days. Low delta, low delta. There's very little chance Apple will be down here in 68 days. So more likely Apple will be in here. Those are the high deltas. If I was buying anything, I would never buy anything that has a delta that's 0.2 or lower. It's just too cheap. In fact, I like 0.3 or higher. So if somebody says, I would like to buy a call in Apple, I'll say, okay, so this would be the lowest one. Maybe you can convince me to buy this one, but really this one is the one I would buy now for 400. I would rather pay 400 here than pay 40 cents here. Because if I buy, let's say I wanted to risk $400, instead of buying 10 of these, I would rather buy one of these. And they'll both bring me good profits if it rallies. This one has a better chance. This one is doomed to die, statistically doomed to die. This one statistically is right there. Okay, so that's my logic.
So let's go over a couple of stocks here right before we get some closing remarks here. We got one here from Scott Mullen, M-U-L-N.
What is it?
M-U-L-N.
M-U-L-N.
Yep.
Mullenix or what? Oh my God. Okay, so Mullen Automotive. Is this a SPAC EV play?
No, it's like an EV company. We've had some news. Yeah.
So this is one of those stocks where you need to know you need to do homework. Why did the income state? This must be like a company that jumped inside of another public company, because this doesn't make sense. Income, 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 and then nothing. So some sort of a reverse merger or something. This chart is messy. I can tell you one thing. I would not want to be long below this. And all the way up here, there are a lot of resistances. So it's a penny stock. That's not the type of stock that I would ever trade, but it's an industry all by itself. You need to know charts in order to trade this successfully, or if you're investing in it, you need to study the company financials. So that's the best I can do for you. This would be something I wouldn't take in my group as a trade ever.
Okay, all right, let me get the other one here that we have. Next one we have Yo. I think he's just saying what's up. All right, so next one, let's do this. Let's do Google. It's a
Google. So I'm gonna save you all the trouble. I did 176 tickers today. I could have covered 150 of them with one answer. This is not an obvious entry point. I would rather buy it on a dip. It could go a little bit more, but for me to invest in it full size here, I'm taking a big risk. If I'm trading, I could trade it actively to the upside, but the easier thing to do is to wait for a dip and buy the dip, because it has gone too far with the market without a breather. So the market, again, I told you, you need to see what the market is doing before you invest in other companies. So down here, you couldn't find one bullish person on CNBC, I guarantee it. We don't watch CNBC. We don't listen to news. Now that the market has recovered 18%, now everybody wants to buy everything under the sun. That's how markets exist, because the casino, the market makers, are taking your money right now, just like they took your money right here on puts. So here's the other thing we don't realize, that the market on Friday was 10% away from an all-time high. What? Down here, everybody pooping their pants. Now that they're 10% from an all-time high, now everybody wants to get long. So Google, great company, monster making machine, into 123 is not an obvious entry point. A dip into 115 or 112 would be ideal. Buy the dip next time the market gets scared about it. Don't short it. There's a better pivot point. Look, bounce hard, bounce hard, bounce hard, lose it hard, and never able to regain it. What do you think is going to happen next time you get to 125, 127? That's why I said, if you're a trader, you can still milk some upside out of this. But if you watch the video that I'm going to do tonight, you will know what kind of context that means.
Hey, I want to give a big shout out here to Tess, our newest member here for the Options Inner Circle chat room. And before we do close out here, just know everybody that does join will get a free laptop. It's for the whole year. You have a 30-day money-back guarantee, and also keep in mind you will get 2 bonus items that we added here. So Nick, any closing remarks on your end on not just on the markets, but the chat room, what you guys will be looking forward and all that?
The chat room was hopping. Friday was kind of somber because there were a few people that took a credit call spread. Most of them rolled out of it until Monday and Tuesday. So we'll see if we can save that. So if we dip on Monday, take advantage of that dip to fix any broken bearish positions that you might have, because the dip will not extend too far, at least on paper. They're going to try to bounce it. Hope springs eternal, and hopium is a pretty strong drug in this market. Keep your head on a swivel. Don't listen to news. There is a Fed event on Wednesday. It is not an event. The event happened 3 weeks ago. The Fed event is them releasing the notes. Somebody taking notes from that meeting that happened 3 weeks ago, where they told us what they decided. They had the speeches, they answered questions in live sessions. So there's no mystery. If you want to know if they put mustard on their sandwiches, then you'd read the minutes and go, oh, that's news. Otherwise, there's no news from the minutes. CNBC will let you know that there was news, but there isn't. It happened 3 weeks ago. It wasn't a secret meeting. They told us the outcome of the meeting. So what I'm saying, don't react to the headlines. Plan your day, plan your week, plan your trades, stick to your guns. You know better than the quote experts on TV.
Right. No, that makes a lot of sense there, Nick. Well, thanks a lot, man, for being here with us. I know that you had a packed day for a Sunday. But we're still going. And look, I remember when we started the chat room, over a year ago, Nick, and now it's a great community, about 350 people live with you every day. It's great. I mean, I'm sure you feel amazing. You've helped so many traders, man. So
It is
shout
very
out, brother.
taxing for me. I'm stuck here from dusk till dawn, which we haven't said. So basically, you can reach me 24/7 in the chat room. What's static? At your own time, you pop in. Or you can have me all day, every day, no joke, from before the market opens till after the market closes. I'll be stuck in here sharing this, no camera because of bandwidth, sharing my charts and commenting. And you'll be one of these people here having a blast. I have hundreds of these pictures of people giving me messages that give me chills, but I can't show you all of them because we'll be here all day. So I hope you've joined me. You have nothing to lose. Benzinga, if you cannot temporarily invest whatever they're asking you to invest for the opportunity of a lifetime, something. I mean, if you divide that amount over a year, how much is it per session? It's insulting to me that little amount of money is too much for somebody to bear, because I know how much effort I put into it. It's not like that I'm a
Right.
genius. It's just the effort is there to teach, and I answer every question. And sometimes the patients get tested. We had a heckler on Friday, I think. He was upset, but great people in the group. Join us, you'll know what I'm talking about. It's hard to convey. You're just gonna have to do it. They'll give you your money back. I promise. I mean, Benzinga, they're not shy. It's not, a junk company out there. That's Benzinga.
Yeah, that's true. Marky Pollard asking when you start. So Marky, basically Nick will start about 8:30 in the morning. So it's I'm telling you, man, it's definitely. I mean, I don't know where else you're gonna go. Let's say you go university, pay what you're paying here, and have somebody Monday to Friday, 9 to 5. The teachers there. I mean, they talk. You know what I mean?
I
Like it's
wish
so
I
different.
wish I had this. I wish I had this when I was
Yeah.
starting out. All of my knowledge I learned on my own. I didn't study with books. I didn't read books. I met a couple people to help change my outlook on charts. It's like, oh my gosh, I could not believe it. I put my charting skills against all the best of Wall Streets out there, and it's my own stuff. I'm not an Elliott wave guy. I'm not a harmonics guy, but I know how to use both to a degree. I'm a levels guy. Look left on the chart. That's all you need to do. You know when not, like, I shouldn't buy anything going into this candle. Yeah, for example. Anyway, so that's what I got for you today, Rodrigo. I appreciate your help, friend. You are
Yeah,
always here for me. The company is excellent.
yeah, man. Thanks a lot for being here, Nick. All the work you put out there. So we'll see you there in the chat room. Nick Shaheen, there you go, guys. Big shout out, of course, to Nick Shaheen. 1 second, hold up. Let's make it official. All right, let's go.
Pew, 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 pew. Now
All
tell me,
right.
this is I haven't used GoToWebinar in a long time. How do I log out of here?
I think we're gonna log out here in a little bit here. So we're gonna be ending the session. Everybody on YouTube, make sure that you're clicking that link that we put there. Dan back, what's up? Itchy, Barry, guys, let's see you in the chat room. We will see you guys tomorrow.
All right, later.
All right, let's go.